Well, I am Caitlin Moore. I'm the financial literacy manager here at UBT. And what I do is I just teach financial basics. And that's what we're going to be doing from here on out with all these um, uh, meetings or classes. So today we're going to start on budgeting, and it's going to go 2 weeks for budgeting because it's a pretty long series. But we'll talk about how to budget proactively, meaning looking ahead, how to budget on an inconsistent income. So if you don't have the same amount coming in all the time, and then what should be in a budget, needs versus wants. And then we'll talk about planning for emergencies. So it's a longer series. We'll go 2 weeks, but really we start with the budget, like the basic budgeting. So that's where I'm going to start today.
Okay.
Feel free to ask any questions if you have them. Feel free to use the chat box. I do get the alert on my screen. I would strongly suggest waiting until the end of each section to ask questions because I might answer them. So I'll give breaks for questions, but feel free to ask if you do think of one, especially over the chat box. Please keep your mics on mute unless you do have a question. And then you're free to keep your camera off if you'd like. I will record this. I am recording it and we put it on YouTube. So just for confidentiality reasons, you do not have to have your camera on. It's completely fine. I actually don't think it shows up in the recording because I have the screen share on, but just so you know, we are going to put this on YouTube. Okay. So a little bit about me really quick. My background's in social services. It's not banking. I am not a banker. I've never worked in banking. I literally have just taught and trained my whole career, even in social services. So teaching is a big passion of mine, and teaching things that matter is also a passion of mine. And money matters. Everything that we do involves money, whether we want to admit it or not. And so I have learned through my job and my education and my past career in social services that not a lot of people, including myself, have any foundation for money. Where did we learn anything? We just didn't. Some of us just have to pick it up along the way. Some of us seek it out, but I would say most of us, we're not taught anything about money. And so UBT has really taken this to heart and created this program where we're out in the community teaching it, which I love doing. I love teaching. So I also love one-on-ones, which I'll get to at the end of what that looks like and how it can affect you. So I am not here to talk you into anything or have a sales pitch. That's not what I do. Everything is free that we do, that I talk about. So I am not here as a sales employee. It's really just to teach you some financial basics. So today we're talking about budgeting. So let's just get right into that. All right. So let's define what a budget is. I will come back to that. So without reading all of this, a budget is a financial plan for a specific period of time. So it could be a month, it could be a week, it could be every 2 weeks. For this session on budgeting, we're going to talk in month terms. So when we're planning ahead for our budget, I'm always going to refer to a month at a time. But I do understand that some people have to budget on a weekly basis or every 2 weeks, and that's fine. But as far as what I'm talking about, I'll just talk in month terms. So a budget is a financial plan for a specific period of time. So we're just planning for a certain period of time. Why is it important to budget? So 2 out of 3 American families live paycheck to paycheck. Living paycheck to paycheck means you get paid on a Friday, and by the next Friday when you get paid, there's nothing left. All of it goes somewhere, which means there's no savings to plan for emergencies, which leads to the next point here. 40% of Americans could not cover a $400 emergency today. I've heard the statistic being a lot higher, more like 60% of Americans could not cover a $400 emergency. So what this means is if I left my house today, got in a car accident, and my deductible is $1,000, I could not cover that. I couldn't even cover it if it was only $400. So that's at least half of Americans do not have $400 in savings to cover an emergency without using a credit card or borrowing from someone. And then the American Psychological Association, so they're the big researchers on anything psychological, recently reported that money remains the number one stressor for 72% of Americans. So we're talking like three out of 3 out of 4 Americans would say that their number one stressor is money. And I have found through my teaching that even when folks have medical conditions or something like that, mysterious ailments, if they really looked into why, a lot of it has to do with money, because our stress comes out in physical form, which is our next topic here. So, common effects of stress. So, if we look at these 3 categories on your body, your mood, and it's covered up by my picture here. Sorry, your behavior. We often have ailments that we feel first. So headaches, muscle tension, fatigue, stomach upset, sleep problems. I'm a big sleep problem person. So when I'm stressed, or before I even realize I'm stressed, I often lose sleep. I don't sleep a whole lot. And then on your mood, anxiety, restlessness, sadness, depression, things like that. So for me, when I have sleep problems, I also get anxiety, and they go hand in hand. So I'm a big anxiety person, and then I lose sleep, which causes problems when I'm not getting enough sleep. I get more anxious about it. And then on behavior, overeating, undereating, anger outbursts, social withdrawal, coping mechanisms. We find some sort of coping mechanism for our behavior. But if we kind of work backwards, even if we're finding that we're using a coping mechanism and we don't know why, it's okay, what's the mood that follows that? Or what's the mood that causes that? And then what is the effect on our body? So we could go in any order to figure this out. But if we looked at that statistic on the last screen, about 3 out of 4 Americans find that money is their number one stressor. Oftentimes, if we just look at this chart, we can go, yeah, when I'm stressed about money, I've got a body issue, I got a mood issue, and a behavior issue. So mine is definitely when I have money issues, I lose sleep over it, and I'm thinking about it because I've got anxiety about it. And then oftentimes it's social withdrawal for me. And I see this a lot with people around me, because as a single mom, and when I don't have my son, when he's at his dad's, I tend to go out with friends. I want to see my friends because I'm not dragging my 4-year-old with me. But when I'm broke, you could see how I would pull back from that if I can't do it. So we probably all can relate on some level of how stress affects us. And then money is often related to that stress. So let's just dive right into budgeting basics. How does this work? So it's actually quite easy. There's just some steps that we're going to take, and I'm going to walk you through it. And I also have resources that I'm happy to send. But it's comparing your incomes, what's coming into your expenses, what's going out. That's a budget. That's the budget basic right there. To get a little more deeper, we have to understand where our money's coming from. Some people have one source of income. That's it. What comes in from that one, whether it's a job or something like that, that's it for them. Some people have multiple. And the resource that I have for you, I have these things listed to give you an idea, but we have to understand where our money is coming from, because if any of that doesn't come in, we have to make adjustments in our budget, but we have to know where it's coming from and then where it's going. This is key. And this is the most anxious part of the whole deal, is knowing where it's going. And I'll talk a little bit more about that. But a successful budget, once it's set up, which it takes an average person 3 months to make a budget, because we're making adjustments all the time. And it's okay to make adjustments. Just know that you're never going to have it perfect. Life happens all the time. So we have to make adjustments for that. So the main part of a budget is knowing where your money's coming from. So where you're getting it, and then where it's going. So the expense part. Okay, so we're going to talk about the how-to guide for budgeting. There's 3 sections. There's the net income. So that's what you bring home, net versus gross. If you think about net, your fishermen cast out a net into this ocean. So the ocean is everything that they could possibly make. They drag in the net, and that's the fish they get to take home with them. So net is what you get to take home with you. And then the second part is your expenses, whether it's weekly, monthly, or annually. Annually, often we forget about that. And then we're going to compare. That's what we're going to be doing. Your budget might change every week or month. So that's why I said sometimes people have to do this on a monthly, biweekly, or weekly basis. That's okay. I talked to someone at my office recently, and she says she budgets every 6 months. And I had never heard of that, but she just lays it all out for 6 months. And then she just kind of puts everything on autopilot. I feel like that's like way high above me. Like I'm not there yet. But whatever you need to do to be successful, it's okay. Whatever you need to do for your budget. If you have inconsistent income, you might have to make adjustments more often. And we're going to talk about inconsistent income, but that's like the best example I could come up with is like a server. So they make a hourly wage, but they make tips. So one night might be really bad and the next might be really good. That's inconsistency. You don't know how much you're going to be making. But you can kind of possibly plan ahead for a minimum amount. And we'll talk about how that applies to your budgeting. So there's kind of this long-term timeline with budgeting. You're never going to stop budgeting. And this is kind of what it looks like from beginning to end. And what I mean is your whole life. So building an emergency fund that's equal to the amount of deductibles that you may have. So once we put together the budget, we want to build an emergency fund. I like to ask people how much their car insurance deductible is. So if you got in a car accident, how much would you have to pay out of pocket? And that's how much you should save in cash. Because especially here in Nebraska, we have terrible roads and people break windshields and they get car accidents often, especially this time of year. And so it would be nice to have that in savings. So you can just go straight to your savings and say, I can pay for my deductible. The next step after you have an emergency fund is to pay off your debt. And we'll talk about this in one of the other meetings that I've got a schedule that I'll show you at the end of kind of what we're going through, but paying off debt. The next one is building up an emergency savings once you have no debt to 3 to 6 months of income. So this would be a bigger emergency savings to say, if I got laid off, if I lost my job, I would have 3 to 6 months of income to cover all of my expenses. So this wouldn't be 30 to 6 months of total income. It's really the income that you need for your expenses. So if you make this much, you might only need this much for expenses. And that is what we want to save 3 to 6 months for. So for a lot of people, that's thousands of dollars that they're saving, which doesn't come easy for most. So this is building an emergency fund like this can take some time, and that's okay. The next step after you have that savings would be consulting with a qualified professional for like investments and other bigger things, because now you have disposable income, and then saving for retirement, children's education, and other major things like maybe a car or a house or something like that. So some of these things folks never accomplish. Some of these things take years and years and years to accomplish. It just kind of gives this timeline of what we're working with here. Now we're going to be talking about the budgeting piece, like the beginning of this, not even the emergency fund topic there at the top. We're going to talk about that later, but we're just talking about the basics, like bringing everyone up to even to know what they're making and where it's going. So let's talk about how to budget. So there's a lot of financial gurus out there. You can Google them about how they would say to budget, things like that. This is a chart of what kind of the common theme is around budgeting. If you're doing it right and you spent your money in all these areas, this is kind of what the financial gurus all agree on as far as ranges should go. I want to point out housing and transportation. So transportation should only be about 15% of your budget. So if you make $100, you should only be spending about 15 on transportation. So when you go to the bank to get a loan, oftentimes banks will look at your income and say, I'm only going to give you enough to pay 15% of your income. So if you're getting a 5-year loan, they're going to look at your income for that 5 years and say, we're only going to qualify you for this amount. And that's the same for housing. They don't want you to be set up for failure. So they kind of stay in this range. Some financials will say 30% for housing. So they don't. So every month, this is what they're saying is that you shouldn't be spending more than 30% on your rent or your mortgage, or more than 15% on your car payment or your transportation, things like that. So that's kind of what this means. Some people don't give, some people don't save, some people don't use, they don't have any debt. So obviously that money can go elsewhere, but this is kind of the middle range of what most analysts would say is a healthy budget. I have this in a PDF that I can also send with the budgeting forms that UBT gives away for free. So at the end, if you want this, throw your email address in the chat box and I will send everybody the information, but I also send Veronica that. Okay, so here we go. Here's the how-to guide for budgeting. Step 1, write down all of your income. No matter where it is, you can get out a piece of paper, write down each line of where you get it. So job number 1, write down your income. Job number 2, write down your income. Child support, alimony, SSI, Social Security, things like that. Write it down. If you get an income, write it down. And it needs to be written on its own line. And then total that up at the bottom. There you go. Now we have step 1 done. Step 2 is write down all of your expenses. This is the tedious part about budget building. Everything needs its own line. So eating out is its own line. Grocery money is its own line. Rent, utilities, all those things are their own line. A lot of times people forget the things that they spend biweekly or monthly, like once a month. So that would be like bills, and then yearly. So like your car registration, that's a yearly expense. A lot of people forget about this, but it needs to be written down. Where is your money going? So I sit with people and I help them build budgets one-on-one. And the first homework assignment that I have for someone, I give them my expense sheet and I say, go back to the month prior into your bank statement and calculate it all. So figure out how much you spend on gas and groceries and eating out. Everything, streaming services, everything that you spent money on needs to go in a category, total it up. And that should be everything you spent that much. We call that a reality-based budget. The first month, we just need to figure out what we're spending our money on. We're not trying to figure out what we should be spending our money on or how much money we should be spending it on. We just need to know what we're spending it on, because there might be some expenses you forgot about that we want to make sure that we're getting, especially if you have children. Expenses come up all the time. And so we need to figure out where your money is going so that when we're shaping and adjusting our budget, we know kind of the ballpark range of how much we need in that category. So step 3, did you consider everything? This is where that 3-month thing comes in, how long it takes folks to build a budget. Because oftentimes we're building our reality-based budget and we forget about things for like 2 weeks. And then something pops up. It's like, oh, I forgot about that. Those type of things could be like gifts or the car registration or an expense that only comes every once in a while. I just got my water bill today, and that's a quarterly bill that I get from the city. So it's not even a monthly bill. It's like every 3 months. And that's something that I often forget about, is things like my water bill, because I don't pay it every month. But as you think about those things, write it down, get it into your budget. And then step 4, once you know how much income you have, what's coming in, compare it to how much you're spending. So if we made our reality-based budget based off of January, because the month is done, we're going to compare how much did I make, how much did I spend? And then we got to figure out if that's working for you. That's the whole goal of budgeting. There's 3 things that could happen here. Sorry, it's on one of the slides, but 3 things could happen here. 1, you spend more than you make. So you're in the hole. So where is the money coming from? Are you spending on a credit card? Are you borrowing from folks? That we got to figure out where you're getting this extra money. The next thing that could happen is that you're zeroing out. You make enough to spend it all and nothing more. So you're not going into debt trying to live your lifestyle. You bring in what you spend, and that works for you. And then the other one, which is like the American dream, is that you make more than you spend. So at the end of the month, you have some extra money. But one of those 3 things will happen for everyone when making a budget. And we got to figure out where you stand, because if you are spending more than you're making, that's when we have to go back into that budget and say, what's not working? Am I spending too much eating out, which is usually the second highest expense in people's budgets next to their rent and mortgage? So most people spend more money on eating out than their utilities or their car payment, things like that. As an example, I worked with a single dad who had 2 girls 50% of the time, so only half the month. And he totaled up his expenses one month, and he spent $1,100 on eating out. $1,100, which was more than he was spending on his mortgage. So that was a reality kick for him. But it was necessary, because otherwise he would not have known how much he was spending. For those of you who have inconsistent income, making your income budget is going to be more difficult because you never know what's coming in. So what we do want to figure out is, what is the lowest amount of money you can count on coming in? So here's my example. If you are a server and you work 20 hours a week, you know you'll get 20 hours a week, no matter what. We're going to budget for your hourly wage on 20 hours a week. And then we're going to think about your tips and say, what is the lowest amount that you make? Is it only $20 a day? Like, that that's what you're going to make. Then we're going to consider $20 a day. Is it more than that? But what is the lowest amount that you can count on coming in every time you work? That's what an inconsistent budget will look like. Because if you're counting on 20 hours a week at your hourly wage, plus say the $20 every time you work in tips, if you make any more than that, that can go into savings or to help pay off debt. But we can only count on the lowest amount that you're going to bring in. So don't go high with this. It is literally like you're promised 20 hours a week. Great. That's the lowest we're going to get. No matter what, it'll never get lower. If you're one of those that works in between like 20 and 40 hours a week, go with the 30. Actually, no, you're supposed to go with the 20 because 20 is the lowest amount. So always go low. If you do that and you're not making enough money, that's when we know we might need to cut back or go ask for more hours to know that you're going to be making that money. But it gives us an idea of how much money you need to make in order to pay all of your bills with inconsistent income. So again, inconsistent income, only use the lowest amount that you absolutely are sure will come in. Okay. And then anything extra, which you will add to your budget at the end of the month, goes into paying off debt faster, a savings, something like that. It's like bonus money every month, but we cannot count on that money coming in. So we're not going to budget around it. Okay. So this is what my worksheet looks like for your income. So if you're writing down your income, I just put some things on here that might be possible income for folks. So job 1 and 2, child support, alimony, SSI or disability, bonuses, incentives, or other. Maybe you have another income. I work with a lot of youth that still get allowance, plus they're working a job, things like that. So if you have other income coming in, write that down. But this is the counted on assured income that you're making. So if you are one of those inconsistent earners, for job number 1, you're going to write down the lowest amount that you are guaranteed to make. A lot of folks will want to put like a tax return on here. That's not what we're using our income for. This is our strict monthly income that we are making so that we can budget around that. Things like tax returns or even bonuses that you can't count on. The bonuses on this list are things that will come in however often. But we're talking, if you're getting a bonus just randomly, we're not going to put that in our budget. We're going to use that as extra money to pay something off or save a little bit more. Okay. And the next one is the expense worksheet. And this comes in, this is very handy for those of you that are just like, I'm overwhelmed by the idea of making a budget. I will make this available to you. I've put every idea that I can possibly think of. And on this one, the one that I have that I'll send you actually has streaming services because that one keeps coming up. But debt, any debts that you have, home, so your rent or your mortgage, property taxes, HOAs, repairs, you might not have all of these, and that's completely fine. This is just ideas to get the ball rolling when looking at your budget. So utilities, those are various ones. Transportation, maybe you have 2 car payments. Maybe you don't. Maybe you just take Uber or you take the bus, something like that. That's on there. Clothing, how much are you spending on clothing? The second column there is food. You notice that I separate groceries and dining out. These are 2 different things, and we'll get to why they're 2 different, and I'll explain this in our needs versus wants. But basically, if push comes to shove and you're out of money, dining out goes. You should not be dining out. We need groceries to survive. We don't need to go to Taco Bell. That's why I like to tell people, you've got to go to the grocery store to put food on the table. You don't have to go to Taco Bell to eat out. So I like to separate those because we have to budget for groceries. Dining out is a treat. So I want to make sure that those are separated at all times. Insurance, pets. One of the things I would encourage everyone, if you have a pet, great, put that on the budget. If you're considering getting a pet, maybe hold off until you understand your budget. I see this a lot that folks just dive into getting a pet and they don't know that they can't afford it. So now that we're actually working on this, just hold off on the pet thing until you know that you can absolutely afford it. Children expenses. This is one that changes. If you don't have children, fine. If you do, add on what you need on there. For me, I've always budgeted a certain amount of money for my kiddo. So like diapers and wipes and then clothes. Like I alternate when I purchase those. So one month I might buy all clothes and one month I might just buy diapers and wipes. I put the food for him in our grocery budget, things like that. But I've been very picky about when I buy things because I try to buy things on sale, especially diapers. And so I only allot a certain amount of money towards him in the budget. Now, as he's getting older, I might have to add to that like extracurriculars. Like I signed him up for swimming lessons. So that's an extracurricular that I've had to add to the budget. So with children expenses, do what you got to do with that. I don't pay childcare, so that's not in my budget. But if you're one of those that do, add it. Entertainment, these are kind of other things that I try to think of, like streaming services I put in there. Add what you have to add. So vacations, babysitting, I took babysitting out and added the streaming services because we had childcare up and children expenses. But if you have something that you are consistently spending money on, add it to the list. Cross something off that doesn't work for you and add it to the list. For me, I have a coffee budget. I literally have a line for coffee. I call it my fun money, but I tend to spend my fun money on coffee. But I know that if money gets tight, that's got to go first because I've got a coffee maker at home. I just like the experience of buying coffee. So I make sure I budget for that. So if there is something specific, I met with a girl the other day, she gets her nails done on a weekly basis. That's part of her budget. So I said, pick a line in here and add it because we got to make sure that you are accounting for the money that you are spending on your lifestyle. It's super important that you don't skip anything because we have to have a reality check of what we're actually spending our money on because there are some things that are going to go or get decreased if we don't have the money to pay our bills or expenses that we have to. My job is not to tell you you can't do something. So I'm not here to say, don't get your nails done. I'm here to say, hey, can you afford to do it as often? So maybe if money is short, and I told this girl this, once we have your budget, if you're short on money, you may not be able to get your nails done every week, but maybe we cut back to every other week, something like that. So I'm not here to tell you you can't, but there's areas that are a must and there are areas that don't need to happen. For me, it's coffee. That's kind of my hobby. I really don't do much else. But if money is tight, that goes, or I limit what I'm spending. I also put overdue bills on here because a lot of folks have like collections debts or overdue bills. So let's say your electricity, you're still paying on your electricity, you're just not caught up. So I'd like to know that might be considered a debt. If you want to put it up there, that's fine. But if you are overdue on some bills that you need to catch up on, I would encourage you to put that on your expense list. So you have your expense list now. You're filling it in. I would encourage you to go a month back to actually look at what you spent and then total it up. Figure out how much money you spent. So in January, for instance, and then we're going to compare it to our income. And like I said, there's three things that could happen. You zero out, your income equals your expenses. You're just evening out. You don't have anything left over, but hey, you got to live the lifestyle that you wanted. Positive would be you have more income coming in than you do that you're spending. And that's kind of the American dream. And then you're negative. You're spending more than you're making. This is where we have to make some changes to the budget. Okay. Which is not a big deal because now we have a reality of what we're spending our money on. How much are you overspending each month and why? We can talk about that of why you're spending extra and then how are you spending it? A lot of folks use their credit cards, but then they have to still account for a credit card payment. So that's an added bill. So if we stop spending on your credit card, got that paid off, we would have that extra money from the bill that we're trying to pay every month, even if it's just a minimum. So there's ways that we could cut back on our budget or once we're out of debt, use that money otherwise. So this is the big part of the reality-based budget is comparing and figuring out where you land when it comes to your budget every month. Are you making enough to spend it all? Like I said, I'm not here to say that you can't live the lifestyle you want. It's really just adjusting it to make it work so you're not going into more debt to maintain that lifestyle. So proactive budgeting. This is kind of we're going to kind of go off on a bunny trail right now. Proactive budgeting. So what is that? Proactive budgeting is a practice of creating and following a budget in order to plan ahead. So it's thinking about things that we have to plan ahead for and putting that into our budget. So all I have is examples. This is the best way for me to explain this. So number one, your car registration. You pay that once a year. It costs $350. So what we want to do, so I just registered my car this month and it is around $350. So this is like an actual example for you, but we want to plan proactively. I don't want to have to come up with $350 next February. I would rather just have it. So what I want to do is I want to divide $350 divided by 12 months. That's $29 a month that I need to save. So I have an envelope. I do the envelope system. And every month I take $29 out of my bank account in cash and I put it in this envelope. So the next February, when I go to pay my car registration, I grab my envelope and I've got it in cash. Okay. That's proactive budgeting. It's looking ahead and saying, how much do I need? And then saving smaller chunks rather than coming up with $350 next February. The next example is your kids' baseball team dues are paid in June, but it's December now and the dues are $200. So to plan ahead, let's say we're going to save from January to June. So 200 divided by 6 months is $33 a month. So starting in January to June, every month, I'm going to put $33 in an envelope or my savings account, whatever way you want to save, so that come June, I've got $200 that I can just hand the baseball team and say, here's the dues, rather than coming up with $200 later. So this takes some thought of what is coming up, especially if you have kids, things come up periodically. If you have kids that are in sports, think ahead. What would be due? I always encourage people to save for like school clothes and school supplies if you're not finding it elsewhere for a lower cost. But if you're one of those that buys a lot of clothes at the same time or school supplies, it's coming up in August. So start saving now. You got 6 months. It's February now. So divide that up. Decide how much you're going to spend. If I have one kid, maybe I'm going to spend $200 on some shoes and some clothes and school supplies. So $200 divided by the 6 months, $33 a month, something like that. So kind of plan ahead for that. There's not a whole lot of expenses we have on a yearly basis, but try to think of what those are, especially if you have kids, because that's a big one. Here's another example. School starts in August. Let's say you're going to college and you've got to pay the tuition and you want to pay it in full, but it's January now. So tuition costs $1,140. So you've got 8 months to save for this tuition. Okay, we're looking ahead. So we're going to go $1,140 divided by the 8 months. So I'm going to proactively save $142.50 per month. Can you see how that would help the budget? We're going to save smaller amounts so that we have a big chunk later instead of trying to come up with $1,140. Oftentimes, we can't cover the $1,140, but maybe we can do that proactively on a monthly basis of $142.50. So it's just planning ahead. The next one is you're going to need a car soon. Okay. You don't need it now, but maybe you'd like to save for a down payment. I'm actually working with somebody that really wants to do this. She has a car that's paid off, but she wants a new one. She has an older car. So she's going to proactively start saving. Excuse me. So her down payment is $2,000. So let's say her goal is August. It's February now. She's got 7 months to save. So she's going to save $286 a month, which actually is really great because if she's starting to save now, $286, maybe that's actually going to be her car payment. So she's getting used to this coming out of her paycheck every month, is putting that away for her down payment. She's just going to continue maybe paying around $275 a month for her car payment. So it's getting you used to the idea. But as you can see, she's proactively saving. Now, maybe this person come August, she's like, you know what? I think I want to save a little bit more. She doesn't have to get the car. She just continues. But if maybe something came up in June and she said, I can't save for it this month, or I need extra money. So she just put off her car, buying her car another month, took that $286 and put it towards her emergency, something like that. So there's ways to kind of use this savings if you need it in an emergency, especially in this situation where she didn't have to buy the car. She just wanted to. So I do have a proactive budgeting worksheet to help you. And I will make this available also. So this is things to kind of think ahead. So car registration, gifts. I'm a big gift saver. So I know Christmas time, I'm going to spend a couple $100s on my son. But I also know that his birthday's in February and his family members' birthdays are at various times in the year. There's always good sales in July. So Christmas in July. So I try to plan ahead. I actually have it in my budget to save a certain amount every month. So if I need to buy a birthday gift or a gift for somebody that month, I've got some money in there, but all the extras being saved towards Christmas. Now, come July, I've got a chunk of money in that envelope. I can go buy Christmas in July and save it for Christmas time. So as you can see, I'm piling up this money, maybe using a little bit at a time, but I've got this savings in my envelope for if I need it. And then if I don't need it, come say Black Friday, I've got this chunk of money that I could start buying Christmas gifts for. So I put that in there. So extracurriculars for maybe your kids or you, oil changes that usually occurs every 3, 4, 5 months. Taxes, if you're not getting that taken out of your check, vacations are a big one, down payments, something that you're having to plan ahead for. So I put the total. So let's say your car registration is at 350. How many months left do you have to save? Well, I currently have 12 months because I just paid it. So then how much am I saving every month? And then we're going to look at that total monthly savings and we're going to apply that into our budget. So we need to budget for our monthly savings for these proactive things. Now, I would encourage you, if you are in debt and you're working to pay off your debt, you may not want to save for some of these things. There are things that we don't have to save for. It's just a want. It's something we'd like to do. But applying all that extra money that you would save for, say, gifts and just saying no to people this year and applying it to your debt will get your debt paid off faster. So if you do have extra money that you're putting in savings for various things, ask yourself, do I need to save for this right now? Or should I be applying that money to my debt to get it paid off faster? And I will teach you how to pay off debt. Okay, that's in another lesson. So this is a good worksheet to refer to if you need a little help with some ideas of being proactive and how to save. Okay, so there's a benefit to saving proactively. Car insurance is a really good example. So car insurance companies often make it available for you to pay the whole year or 6 months at a time or just monthly. I'm one of those that pays every 6 months because I save for those 6 months. They give you a discount. So I think I got, I don't know, $5 or $10 off a month if I paid 6 months at a time. Not a huge savings, but hey, it's like an extra month of savings that I saved. So I look at my car insurance. I think it's, I don't know, let's just ballpark it. Every 6 months is like $200 for me. Then I split that up by 6 months and I save it in cash. And then when I go to pay it, I pay the full premium. It's discounted and I've got that in cash. So when you have the cash, you could often negotiate prices. So car maintenance, I put this in the budget. On the budget form, I would strongly encourage you to save now for car maintenance. Car maintenance could be tires or new windshield. Maybe it's going towards your deductible, something like that. Here's a good example. I actually got my windows tinted when I bought my car, and they told me the price that it was going to be, I think they quoted me $260. And I said, that's fine. I'll do it. And then I called them when they said the car's done. And I said, hey, do you give any cash discounts? And he said, yeah, if you pay in cash, it's only $200. So that was a significant decrease. I said, I got it. I'll do it, because I'd been saving in my car maintenance budget for that. So I just handed them $200 in cash because it saved them money to not use my debit or credit card, because companies get charged fees. But also I think there might be a little bit of stashing the cash away, which is not my problem. It's what they want to do. But they gave me a cash discount. You can often do that on car maintenance. I found that you could do that with tires, car maintenance in general, things like window tinting. So cash has power because you can negotiate prices. Not everything can you negotiate. You can't go to the grocery store and negotiate that. But there are things that I have found, especially mechanics, are willing to give you a cash discount on. Cars, they're willing to give you a cash discount on if you're willing to pay in cash. So if you could save for an entire car, then you can often get a cash discount. So in essence, saving in cash is going to save you money. It's going to save you money in the long run. So here are some tools that we have. Money Compass no longer exists, so ignore that. But when you do your budget, your income and your expenses, I would encourage you to do it pen to paper. Psychologically, it is really good for you to write things out and see it on paper. And you can scribble and figure it out until it's perfected. And then I would encourage you to transfer it over to an app. I'm a big fan of Every Dollar. Mint is a lot like Every Dollar. There's tons of budgeting apps out there. Find the one that works for you. I love Every Dollar because I can add every single line that I want to. And what it does is you write down, you pick a line, and then you say how much you're going to budget every month for that. So let's say car maintenance, I save $50 a month. Now let's say this month I had to go get an oil change and I spent $45.65. I go into my app and I hit the car maintenance button and I put in there that I spent $45 and whatever I said, 46 cents. And it tells me how much I have left out of that month, which is going to be less than $3. But at least I know now that I saved some money on that. So once, like, especially for utilities, we usually can ballpark how much we're going to spend on those, but sometimes it's worse than others. So you go in there and you put in what you're going to save and then how much you spent. At the top of the app is how much you made. So I'm on salary, so I know what my paychecks are going to be. And so I have that in there. But if anything changed, I can go in there and change that. So some months I get a third paycheck. So I go in there and I put in, paycheck number 3, and I can write that in there. So at the top, it'll tell me how much money I have, but it'll also tell me how much money I have left. So every time I spend something and I log it, which I can log as many times as I want, like say groceries, I can go to the grocery store 6 times that month and log it. It will tell me how much of my budget I still have left to spend. So it's really nice. It also carries over month to month. So you don't have to worry about typing in all of that stuff every month. You could just go in there and make adjustments, but you don't have to put everything in there every month. So I would encourage you to do the app when you're ready, when you've done your budget, when you're ready to go, because most of the time we have our phones, we don't write things in. A lot of the apps have a paid version where they actually connect to your checking account and do it all for you. So you can go and swipe your debit card like at the gas station or grocery store, and it will log it for you. I have never found a reason to use the paid app part. Never used it. I don't know anyone who does, because it is just easy. Once you have everything in there to go in and log it becomes second nature. You could stand at Target paying for your groceries. By the time you get out of there, you could have that logged into your app. So it's just something that becomes a habit over time. But find the app that works for you. Download a couple of them, see what works. I like Every Dollar aesthetically. I like it. I like the colors that they use. So I'm more apt to use it because I don't mind looking at it. So just an encouragement there to use the tools. So I'm going to check the time here, make sure we're on track. Okay. Yes, I can get through needs versus wants. At this point though, is there any questions about budgeting? Because we've done the main nitty gritty of budgeting. Feel free to use the chat box or unmute yourself. Okay, I'm going to keep going then. So let's talk about needs versus wants. So this is what should and maybe shouldn't be in your budget. We're going to talk through this. This is really important to understand, and there's a little bit of some homework involved if you're going to put together a budget with this. So what is a need? Okay, in the realm of our survival, we have 4 things that are needs: food, shelter, transportation, and utilities. We have to have food. We have to have shelter. Now, shelter can be your own house, your own apartment. Maybe you're living with someone. Maybe you're living in a shelter. It doesn't matter. We just need a roof over our head. And if we have to pay for that, we have to budget for it. Okay. Shelter can mean a lot of things to a lot of people. Transportation also can mean a lot of things to a lot of people. It can mean your own car, or it can mean a bus ticket. It can mean an Uber fare. It can mean a car and parking. It can mean all of those things. I worked with a guy one time that his bike was his transportation, and he literally budgeted to buy a new bike. So he put $20 away a month to buy a new bike eventually. That was his transportation. That's fine. Whatever it takes. And then utilities. We got to keep the lights on. We got to keep the water running. So these in the realm of being on a tight budget, this is what we need to survive, nothing else. What is a want? It's the opposite. It's things that we want, but we don't need them. So concerts, new pets, eating out. Okay. Eating out is different than groceries. Remember, we talked about this. We have to eat, but we don't have to eat out. Okay. So groceries is on the needs. Eating out is on the wants. Movies, sporting events, new clothes. Now, there's a caveat for new clothes. Sometimes you need certain clothes for work. Okay. That's a need. I get that. Maybe you need the non-slip shoes or you need to dress it up a little for work. That's fine. Put that in your budget, but new clothes, going to the mall, just shopping around. That's not a need. That's a want. Okay. There's a lot of opportunity in Lincoln to get free clothes. Okay. Even if it is work related. This is where I encourage people with big incomes and low incomes. New clothes is not a need because there's like literally you don't have to pay for clothes in the city of Lincoln. If you look hard enough, you don't have to pay for clothes. So please do not put new clothes in your budget unless you can afford it. And we'll talk about how to get there. So we have a difference between needs versus wants. Needs is survival. Wants is what we extras. So when it comes to budgeting, needs should always take priority over your want. Okay, you could put your wants in your budget. By all means, please do that. But if money gets tight, the first thing that needs to go or be decreased is a want. So coffee being my example, that's in my budget, but it is a want. I do not have to have coffee. Maybe my body thinks I need coffee, but I don't need coffee. So that is the first thing to go. So when budgeting, it's important to list your needs first and your wants second. It's an activity I have for some folks that really struggle with their budget of just writing out everything in your budget and then organizing for what is a need and what is a want. Or going through your budget, even on my worksheet that I have, and writing an N or a W next to it. Because then if money does get tight, you can just go in there to your W's and say, you know what, can I decrease any of this? Can I get rid of streaming services? Can I get rid of cable? Am I paying for a gym membership that I don't use? So there's things in there we want, but we don't need them. So if your budget includes a lot of wants, decrease your spending on those items or try to eliminate a few. Like I said, I'm not here to say you can't. I'm just here to say maybe decrease the amount. Make it work for your lifestyle, but don't go into debt for wants. I'm not going to put coffee on my credit card. If I can't afford it, I'm not going to buy it. So don't go into debt for your wants. I have this chart. I will send it along as just kind of a reminder of what a need and a want is if you're having some trouble figuring that out. So food absolutely is a need. Shelter, utilities, transportation, essential clothing, uniforms, clothing for work. Those are essential. They're not your extras. Your phone. I will never tell you that your phone is not a need. It is. A new phone is not a need. Okay. If we have a phone that works, that's what's important. Insurance, gas, we got to pay on our debt. That's a need. Even if it's just minimum payments, we have to pay that because we don't want it to go into collections. We're charged extra fees. Our credit goes down, things like that. And then car maintenance. That's a need. We got to be able to fix our car if it breaks because that is how we get to work and pay our bills. Want would be eating out, entertainment, new pets. So if you've got pets, put in your budget. You don't need a new pet. Cable, Hulu, Netflix. Now I have a 4-year-old. For those of you who have kiddos, TV is a need. It's not really though. But Hulu and Netflix is usually what people trade instead of cable. So if you have cable, I would encourage you to even just get rid of it now and just get Hulu, Netflix, Disney Plus, things like that. It's a lot cheaper, or bum those passwords off other people. I don't pay for Hulu or Netflix. My sister pays for Hulu and my boyfriend pays for Netflix. So I don't pay for any of that. I feel like everybody shares something, or I actually pay for Peacock. And that's the trade-off with my boyfriend. He gets the Peacock, I get Netflix. So, we just trade that off. So it's cheaper for both of us. Clubs and sports, vacation, gifts, new phones. So I mentioned gifts before. Please don't feel bad for saying no if you can't afford to buy gifts. This is a very humbling experience, but if you are taking care of yourself and trying to dig yourself out of a hole, especially if you have debt, it's okay to say no or get creative, especially with kids. Maybe you help them make something, or maybe you can buy ingredients to make cookies or fudge or something fun. And you get the time with your kiddo and you give that as a gift rather than spending $25, $30 on a gift for someone. So if you struggle with your budget, gifts do not have to be given. Okay. They really don't. I would have a lot of trouble accepting a gift from somebody that I knew was really struggling financially. So please don't feel bad about saying no to that. And then a new phone. I always have to encourage my youth to understand that a new phone is not a need. A phone is a need, but a new phone is not. So how can I still get my wants? Ask yourself, do I have money in my budget for it? If you do, by all means, get your wants. Put it back on the list. Can I buy it cheaper elsewhere? So this goes along with this 24-hour rule for a big purchase. So you determine what is a big purchase, and then maybe wait 24 hours before you actually purchase it. So $100 to me is a large purchase. If something costs over $100, I don't buy it right away. I at least wait 24 hours so I can research it. Especially if it's on a weekend, the sales at main stores flip over on Sundays. So if I waited, would it be cheaper? Can I research it? Can I find something better for the same price? Could I find something cheaper for a cheaper price? So just wait and see if you can lower the price somewhere. And then if you wait, will it become less expensive with a sale? And then most importantly, ask yourself, can I live without it? Can I live without going to Scooters every day? Yes, absolutely. Do I feel like I can live without coffee? No, but I have a coffee maker at home, so I'm okay. And then the coffee goes into the grocery budget. But if there's things you can live without, do you need it? Can I live without Hulu and Netflix? Yes, I really can. But I can put it in my budget and make it work. So that's how we're going to do needs versus wants. If you can afford it, by all means do it, but maybe you have to have less of it or look for a deal. So when budgeting, reference the budget you've already created. Evaluate your needs versus wants. Maybe put that N and that W next to each of the items. If there's some of your needs actually wants? So go back over that list and say, is this a need or is this actually a want? So with a kiddo, I think Hulu and Netflix may be a need, but at the end of the day, it's a want. We don't have to have it. Can you eliminate anything from your wants list? Can we just take it out altogether? Oftentimes that's where people struggle. It's usually a no, they can't take it out. But if there is something, take it out, save some money. Can your needs be decreased? So the things that you need, can you lower your grocery budget? Can you lower your utilities by using less electricity or hot water, things like that? And then can you make your wants list more practical and less expensive? So maybe you do love to go clothes shopping. Maybe you just limit how much you're spending on clothes. So we're making it more practical or less expensive. So that's where I'm going to end tonight. I do want to go back here to the beginning and talk about real quick the schedule in which I'll be talking about things. So we're going to do this every other week, same way over Zoom. Next week, we're going to continue the budgeting conversation. So I will send you information if you want to put in your chat box to give me your email address. Otherwise, I'll just send this to Veronica. But if you want to put together a budget and come back in 2 weeks and talk about it, if you have questions, you don't have to share your numbers, but maybe you have questions that you were looking at over the next 2 weeks that you need some answers or some help on. Maybe it's determining if it's a need or a want, things like that. But we are going to continue the budget conversation. And then we're going to go into like banking, debit versus credit, and building your credit. There's lots of things in here every other week that we'll be talking about. I've got stuff on financial aid if you want to go back to school, renting versus buying and preparing to buy a home. Maybe you're in no place to buy a home, or maybe you're thinking about it soon. I talk about 2 years out, 1 year out, things that you should be doing. Talk about different types of loans, payday loans, loans at the bank, paying down debt. We'll talk about the process of paying down debt. So this is the schedule here if you have any questions, but we're going to do this every other week. So come on back, and feel free to ask questions too. I'm going to race to the end of this here and give you my info. Here we go. So this is my office line and my email address, caitlin.moore@ubt.com. If you want to reach out to me, if you have questions, I'm happy to do that. I actually work with folks one-on-one as a financial coach, which is free. You don't have to bank with UBT. So if you wanted to build a budget, learn how to pay off your debt, I can help you with that. I'm happy to meet with you do Zoom chats, meet at a coffee shop, I'm happy to do that. One thing I would encourage you to do before you reach out is come back in 2 weeks and let's finish the budgeting conversation, because some of your questions might be answered. But I'm more than happy to work with you on a one-on-one basis. If you want to reach out to me, I work with a lot of people who do not bank at UBT, and that's fine. I'm not here to make you switch or anything. It's just a service that we have for the community. So feel free to reach out.